welcome to the Mortgage Rate Weekly Market Update for the week of October 2nd, 2017. Hello, I'm John Thomas with Prime Residential Mortgage, here to give you an update. Well, last week we did see mortgage rates move higher. If you take a look at the bond chart on the screen, you can see the short-term trend for mortgage bonds have been the sell-off since they hit the high back in early September, which was the high since November 2016. So they've sold off. Last week they did sell off again, but they were able to hit a floor of support, as you can see there on the chart. And they closed right down at the bottom of support right at the end of the day. This chart was right before the bond sold off, so they actually did sell off and have a red candle at the end of the day and ended right on support. So with that in mind, if that support breaks, that's going to be very bad news. With the short-term trend for bonds to sell off, and we're sitting right on a floor of support, we're going to recommend locking in your mortgage rate. Take advantage of the lowest rates we've seen almost all year, because we need a good bounce off that support to have a good feeling the bonds are going to move higher with the headwinds we're facing with the stronger stock market. So we're going to recommend locking in your mortgage rate to start the week. If we can bounce off that floor of support and you haven't locked, then great to float. But if we break below that floor of support, if you haven't locked, you better quickly switch to locking, because there's a long way to run down. Now, in the economic news, a big read last week was we had consumer inflation come out with the Fed's favorite measure of inflation, the personal consumption expenditure. It dropped to 1.3% for August 2017, which was the lowest since November 2015. Now, low inflation is good for bonds. It's going to be tough for mortgage bonds to move too much higher on the long-term rates if inflation stays low. Now, then we saw the final reading of gross domestic product, or GDP, for the second quarter of 2017. It came in at 3.1%, which was a big increase from the 1.2% of the first quarter. And this was also the best reading for GDP since the 3.2% that was recorded back in the first quarter of 2015. So GDP has rebounded, doing very well there. Now, the reason for the higher GDP the second quarter versus the first was a big buildup in inventory. So we'll have to see if the GDP can continue without the inventory buildup. Then on Thursday, we saw weekly initial jobless claims come out, and the claims did move up about 12,000 claims with 272,000 claims for the week. The jobless claims are still being skewed higher by the Hurricane Harvey and Hurricane Irma, so we'll have to see how long that plays out for. Last week's claims was revised higher from 259 to 260, and that is the report that's going to be used in the September jobs report, which is coming out this Friday. So that does predict a strong jobs report, so we'll have to see how that comes out. Then in housing news, we got new home sales for August 2017 were driven down by 3.4% because of Hurricanes Harvey and Irma to 560,000 units on an annualized basis. This was the 8-month low for new home sales, but the Commerce Department reported that it only had a status for about 65% of the areas affected by the hurricanes. Typically, they get a 95% report rate from those areas. So we could see revisions higher to the new home sales if that reporting does come in, so we'll have to keep an eye on that. Then we saw pending home sales for August 2017 fell 2.6% from July. There were two main culprits for the drop in pending home sales: low inventory and the effects of Hurricane Harvey and Irma. National Association of Realtors said they could see home sales slowed in Texas and Florida for a couple more months from the aftermath of the hurricane, so we'll have to keep an eye out on that. In the local news, the next first-time homebuyer seminar is Saturday, October 21st in Newark, Delaware at the Christiana Hilton Hotel from 10 a.m. to noon. You can register for that event by giving us a call in the office at 302-703-0727 or online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.